Hello everyone, it's Kingdom Silver here, and in today's video we are discussing why gold and silver ETFs can be so dangerous. Without further ado, ladies and gentlemen, sit back, relax, and enjoy the rest of the video. Thank you so much for checking out the channel. Let's dive right in. And I feel like, unfortunately, I have to give this disclaimer every single time I make a video with this type of headline. No, I am not saying that people are in physical danger if they have any sort of investment in a gold and silver ETF. That is not the point. All right, now that we've got that out of the way, let's actually get into this. Why do I think this is so dangerous? Well, there are a lot of gold and silver ETFs out there, and there's actually been some articles that came out a while back that talked about, hey, a lot of people are starting to invest now. They're seeing, the climate that we're in right now as of the recording of this video. You have Israel and Iran going at each other, right? There's all kinds of things happening in our world that's causing chaos, and people are looking towards safe havens, which are silver and gold, and they're wanting to protect their investments, their nest egg. However, I think the education here is a little lacking, and I would say that both on the stackers, right? I'm going to call us out, and then also on the general public. So I'm going to first speak to the general public, and then I'm going to speak to us stackers. And this can happen to anybody. There was one of my really good friends, is day trader, investor, love you, bro. If you're getting to watch this, he was talking about investing or trading, I believe, in SLV. And that's actually one of the ETFs we're going to talk about today, and why I'm not a big fan of them. So just to clarify, what is a gold or silver ETF? It's a way for investors to be able to have some sort of stake in physical gold or silver without directly owning it. Now, in that, inherently, right, there are some risks. Like I have right here, I own these. I own these 8 Eagles, and I own this American Gold, the half Eagles, and then the 10th ounce gold Eagle here, right? I own these physically. I can hold this. This is in my hand as I'm shaking the camera, right? This is mine. However, you don't physically own gold and silver that is in ETFs, right? They are in the custody of another bank or financial institution, sometimes a governmental institution that is holding on to the metals for you. And so because of that, there's some inherent risk. And one of those is counterparty risk, right? You have people that if a bank gets in trouble, right? If a financial institution gets in trouble and they are not able to fulfill their obligations, then your investment could be in some trouble. And another place that I think especially, and I'm going to harp on this, you're going to hear this, I do not like GLD and I do not like SLV. These are two very popular ETFs, and the reason that I do not like them is that they are not allocated. And what does that mean? So if you've never heard that term before, a lot of people think, oh, I'm just getting in on a share of this. And I'm owning, I can take this share, and that's helping me, own some physical gold or silver with not actually holding on to it. Here's the problem with that. Not every trust, not every ETF related to gold and silver is created equal. And Gold and Silver Pros, formerly now the Freedom Report, Rob Keens, he's done a lot of videos on this. Please check him out. He's a great resource, one of the people that got me onto this topic. He says, and he proves this out, what is called paper gold or paper silver in this case, right? It's a piece of paper, right? Like a stock certificate saying that you own this, right? These are trading at a significant amount above the actual physical gold and silver. So if you said, hey, this share, let's just make it up, is equal to 1 ounce, well, that's not actually the case. And in fact, in GLD and SLV, a lot of these are trading at 300 to 1, like 300 paper ounces to 1 ounce of physical gold or silver that's being held by this ETF. And that's a problem, right? Your gold and silver is not being fully allocated. So what does this mean? Well, if we go back to that counterparty risk, and you are owning this, now please pay attention, especially the millennials out there that really like these types of investments. If you're doing that, that means if these trusts go down, there's a chance you lose right? It's just like owning stock in a company. When investors, when they go belly up, there's different rights legally, right? Who's in the chain of succession, and usually your shareholders are the last, right, to get paid out. So in this case, it's very dangerous to own that type of ETF. Now, having said all that, let's talk to the stackers here, because I think often we go too far the other way, right? We're a very polarized nation and just world right now. We like to say, as the stackers are, I hear this a lot, oh, you can't then invest in ETFs. I disagree with that. In gold and silver ETFs, they say, no, you can't do it. I disagree with that. And here's the reason why. People own 401ks, they own IRAs. And for a lot of people, you cannot pull that money out with having some tax penalties. So if I pull out all my money here and I start buying this physical, silver, that's great. Or I buy some of this gold. Well, that's great, but then I'm getting taxed on that, right? So I think that there's actually some advantages that we're going to be talking about in a second to having these ETFs. Again, I think you should own both, right? For me, with my investments, again, not investment advice, but for me personally, for my IRAs, I own some physical gold and silver through a ETF. I know not everybody likes that idea, but to me, I'm not going to pull out that money and pay 20, a very high tax rate on those funds, pulling it out and then just putting it in physical gold or silver. I'm going to invest in something that allows me to get the best of both worlds. And I think a great avenue for this is the Sprott Physical Gold Trust and the Sprott Physical Silver Trust. Now, just to clarify, I am in no way sponsored by them, have no relationship with them. However, I want to bring these up because I've done some research on them, have watched some videos on people that have done the research on them, and I think that they could be a sweet spot here for those that are saying, hey, well, that's great. I have some physical silver and gold, but I want to try and move some of my investments that are in the marketplace, through your Fidelities, through your brokers, into some, silver investments. How do I do that? Well, these are a great example. And on the screen here, you're going to see some of the advantages that Sprott, both the physical gold and silver trusts have. And I'm not going to highlight all of them, but a couple that I want to talk about is their shares are 100% allocated. What that means is that for every share, every equivalent percentage share of the silver or the gold trust that you own, that is backed 1-to-1 by gold or silver. Another thing that I really like is they give you the option to then pull, if you say, hey, I want to cash this out, you can actually redeem your shares for physical gold and physical silver. A lot of other trusts won't do that. Now, having said that, and you're going to see this on the screen as well here, the thresholds are really high. The thresholds are really high. It's 400 ounces for gold, 1,000 ounces for silver. For most of us, we can't do that, right? That's not feasible, but I like that the option is there. And the other thing that I like is if you are someone that does choose to trade in the market. And I don't think there's anything wrong with that. I wouldn't do that with a significant amount of gold and silver, but you're saying, hey, I want to time the dips, right? I feel like I've got a really good handle on the market and I want to get in and get out and really help my money grow. You can absolutely do that by selling with digital gold and silver. In this case, when it's coming through a trust, you can get out. If you're saying, hey, I'm going to time it when it gets to 37 again, I'm going to sell, and then I'm going to wait for it to go back down a couple bucks and buy back in. You can do that, right? Again, this is an investment advice, but that gives you the option to do so when you're going through a trust like this. So really the summary of this video is, hey, there's some things that you need to be aware of. You need to say, is all trust created equal? Absolutely not. Are there some that are better than others? Absolutely. Oh, and by the way, the Royal Canadian Mint is the one that is holding the precious metals, the government of Canada's arm. They're the ones that are backing the Sprott physical trusts. That's a pretty good counterparty to eliminate your counterparty risk. Again, I'm not a big fan of governments right now, but that is better than, you're just, say, hey, bank that is out there that is, the counterparty or storing the metals for some of these other ETFs. So the summary for this video, Please don't blindly invest in any gold or silver ETF without doing your research, looking at the prospectus, looking at the fact sheet. And at the same time, please don't just turn them away and say, oh, these are a terrible investment or a terrible way to get into precious metals, because they're not. There's an avenue, there's a use for them. Again, it's knowing what they are, what their uses are, and then deciding what makes the most sense for you. Without further ado, ladies and gentlemen, we're going to end the video today. Thank you so much for watching. Would really appreciate a like, a comment. I would love to interact with you. And if you're really enjoying the channel, would appreciate a subscribe. Helps me out. But not only that, and much more importantly, it gets the word out about gold and silver. Be blessed. Be a blessing to others. We'll see you later.